Good morning, and welcome to the Hedge Trade Daily Risk Brief for May 21st, 2026. Global equities remain broadly constructive, with major U.S. indices continuing to trade in strong multi-time frame uptrends. The S&P 500 remains near all-time highs with aligned moving averages and solid weekly momentum, although short-term oscillators are now flashing overbought conditions that could trigger near-term consolidation. The Nasdaq 100 also remains in a strong uptrend, but is beginning to show signs of momentum exhaustion near key resistance levels. Meanwhile, the VIX remains subdued at 16.76, reinforcing the current risk-on environment, although stretched technical conditions across equities suggest traders should remain vigilant. On the SPY projection chart, the S&P 500 is trading at 7,465.3 and continues to maintain a strong structural uptrend. Daily indicators such as MACD and stochastic RSI remain overbought, with MACD now showing a short signal while weekly momentum remains constructive. No major overhead resistance is identified above current levels, while support remains well defined in the 7,300 to 7,350 zone, which has repeatedly held during recent months and now serves as an important risk reference for trend-following strategies. On the Nasdaq 100 projection chart, the index currently stands at 29,480.2. Daily RSI remains elevated at 75, while MACD and momentum indicators are beginning to flash short-term caution signals. Weekly Hull moving averages and the commodity channel index are also showing signs of weakening momentum. The index is currently testing an important resistance zone between 29,118 and 29,200, while nearby support remains established between 28,000 and 28,500. Although no confirmed bearish divergence is currently present, fading momentum increases the probability of consolidation or a mild pullback over the near term. Looking at volatility conditions, the VIX remains low at 16.76, supporting the broader constructive market backdrop. However, the combination of elevated momentum and compressed volatility conditions suggests traders should remain disciplined with risk management and closely monitor support levels for potential invalidation signals. From a portfolio positioning perspective, U.S. large-cap equities remain cautiously constructive, with the preferred approach favoring pullback entries near the 7,300 to 7,350 support region, while avoiding aggressive chasing at all-time highs. Within technology equities, patience remains warranted as the Nasdaq continues to trade near resistance with fading momentum. Pullbacks toward the 28,000 to 28,500 support zone may provide more favorable risk-reward opportunities. In summary, the broader U.S. equity market remains structurally bullish with strong higher timeframe trend confirmation across both the S&P 500 and Nasdaq 100. However, near-term momentum conditions remain stretched, increasing the probability of consolidation or mild pullbacks as markets test resistance near all-time highs.